5 mistakes people commonly make when doing a Roth conversion. So as an advisor, and let me just say in general, and I hopefully can get all of you just re-energized about this. My wealthy clients have Roth IRAs predominantly. I am working this year on doing another Roth conversion myself to get as much of my traditional money converted to Roth. When you do that, you've frozen your retirement account from ever being taxed again. And I'm going to talk on some mistakes people make and some strategies when they do the Roth conversion. But please remember, for your own personal life, for your parents, for your kids, for your loved ones, your friends, and for your clients, for those that are advisors, please continue to talk about making sure they convert as much as possible each year. We call it chunking, from traditional to Roth. If people want to know the equation to tax-free wealth, that's number one. There's several others, but that's number one. So we're going to really be focused on that on a regular basis. But tonight, or what I wanted to talk about is 5 mistakes people make when they're trying to convert to Roth. Okay, so here's the 5 mistakes. Number 1, a lot of clients are going to try to convert to Roth all at once. So number 1, do not convert all at once. Now, that's the general rule. If you have a client with 20 grand in a traditional, they're going to convert to Roth, done, no big deal. You got a client with 200 grand trying to convert all to Roth. What you want to do is a analysis on what tax bracket you expect them to be in, and if it's going to jump to the next tax bracket. Some of you may have seen my Roth chunking training or seen it on YouTube. And basically with the tax brackets, there's 2 major jumps in the tax brackets. Who knows what that is? And we don't want a client doing a conversion that pops them into the new bracket. We want to do chunking in this range and in this range. So that way clients aren't getting a huge tax hit to convert to Roth. So this adds a lot of value to you as a tax advisor in November and December. It's our busiest time of the year. Clients, literally, I'm telling clients now, make your appointment for one of the tax lawyers now for November and December, because we're that busy. Because people are calling up going, I got a chunk Roth, I want to get my 401k done, I want to get my kids on payroll, I don't know what to do with an auto, and a lot of clients have questions. So for those of you that are business owners, make sure you're making that appointment with your advisors, and you advisors be reaching out to your clients now, telling them it's time, and this is where we make that transition to the advisory practice. Anyway, so I tell clients, don't convert all of your money at once because the tax bill could be substantial. Let's do it in chunks. Number 2 mistake. Number 1, number 2. The number 2 mistake is that clients will take out money to pay the tax on the part they're converting. So let's say they're trying to, so let me say, don't take distribution to pay the tax. If your client doesn't have the money to pay the tax, then tell them it's not time to convert. But remind them, any conversion they do now, they don't owe the tax until April 15th. They could even wait until middle of next year because the failure to pay is not a tremendously big penalty. It's cheaper than a credit card. And they could even get on an installment agreement with the IRS to pay that Roth conversion, worst case scenario. And if they've got an asset that's going to be highly appreciated, I'd rather have them paying on an installment agreement for a conversion than paying tax later on their Roth account doubling. Let's say your Roth account just invested in a startup and you're expecting it to bounce double in the next 12 months. Hell, convert that to Roth now, even if you're on a payment plan with the IRS, because you'll never be taxed again. So we want to be on, but let's do an example. Let's say a client has 100 grand in a traditional and they want to convert it over to Roth and they're in a 30% Fed and state bracket. So they're going to owe 30 grand in tax. Well, they go, well, I don't have 30 grand in tax money to pay the tax. So I'll convert 70 and I'll pull out 20 grand to pay the tax. Well, now you're paying, if you're under age 59 and a half, you're paying a penalty to pull money out of your retirement account to pay tax on the conversion. Not good. So I tell the client, just convert 30 grand, find the money somewhere else to pay the tax, sell that RV on the side of your house or some crap that you're not using. And then let's not pull out money to pay tax. Not a good move. All right. Number 3, don't think next year's going to be better. Don't think next year is easier, let's say. A lot of clients will say, well, I'm not going to convert to Roth because next year I'll be in a lower bracket. Last year, I thought I was going to be in a lower bracket. Some of your clients are in the highest bracket no matter what. So just always, I want my clients constantly looking at converting, and this fallacy that I'm going to be in a lower bracket next year does not make sense. So what I do try to point out in this one, here's the strategy, is try to make the conversion tax neutral. I just had a phone call with Michael Naselli today, who spoke at the 360 event, which now I hear the recordings are available, on the intangible drilling cost oil and gas tax deduction, where it can be as high as 100% in the year you invest in oil and gas. So you could have a client have other funds, maybe they've got 50 grand over here that they can put into oil and gas, convert 50 grand to Roth. The deduction on the oil and gas wipes out the tax on the Roth conversion. You may have a client doing a real estate deal, self-rental. They could cost seg 100 grand here, Roth convert 100 grand here. So it makes it tax neutral. So when you have clients in a higher bracket, or they think, oh, next year will be better, now throw out strategies to offset the Roth conversion. Huge value. Number 4, mistake clients make is they forget the 31st is the deadline, and that is December 31st. A lot of people think it's April 15th because it's April 15th to make the contribution to the Roth IRA, but it's December 31st to do a Roth conversion. So very common for us to get frantic emails and letters on April 14th. Do my Roth conversion, do my Roth conversion. We're like, that deadline was December 31st. It's Roth contributions. If you're doing a backdoor or a Roth or a traditional contribution, that's April 15th. So make sure you remind clients it's December 31st. So it's a wonderful email. Many of you that have private practices, you want to be holding webinars and podcasts or sending out emails to your clients, warning them about the deadline. And number 5 is mistake clients make. Let's see if you can see this behind my laptop. Number 5 is they think it's easy. There's an easy button. Mistake number 5. There is no easy button. I myself faced this last month. I was doing 2 Roth conversions, one from Acorns over to directed IRA and one from TD Ameritrade. And oh my gosh, I was like, okay, I need to, because you have to do, you can't transfer from a traditional to a Roth at another location and think that's a conversion. You have to transfer from traditional to traditional and then do your conversion at the same trust company or brokerage that's holding your retirement account. Now at directed IRA, we have a form that does them all at the same time, but it's a specific form for that. So even me myself as an owner of directed IRA, I called the helpline and I was like, who's this? Oh, hey, Ryan, Mark here. Can you help me with my Roth conversion? Because they're in the trenches doing it every day. And I myself was like, how do I do this again? Because all the big brokerage houses have different procedures and timing, which form to fill out. So you make sure you get, and this is what's great about directed IRA. There's a helpline, a chat line. Get on that right away and say, hey, I'm doing a Roth conversion in this way or from here or with this amount or with this client or whatever, and get their help. And it'll save you a ton of heartache.